Hello traders, and welcome back to my YouTube channel, IPDATrader. Now in today's video we're going to be talking about the Asian session. And really the reason why we're going to be talking about the Asian session is because I really strongly believe that the Asian session is the key to this entire Forex game, right? Imagine this gray box right here is your Asian range, right? And what you need to understand is that the beginning of Asia actually involves Sydney, right? Both sessions are active at that point, the 2 first hours within Asia. So, well, I'm not going to get into much detail over here because I've already made a video on that topic. It's called the Forex Daily Cycle. You can go look it up in my channel. It's over there and it has great and ton of valuable information. So what I'm going to be giving you in this specific video exactly, right, is an anti-trading module that you can potentially use, right? If you take the time to actually backtest this idea, backtest the concepts that I'm going to be giving you in this video, this could be everything you could potentially need to make money in the markets, right? I've got clients that really just trade this particular setup and occurrence and are very successful doing so, right? There's really no need to complicate Forex at the end of the day. You need to make it individual and you need to focus on what works for you. And if you happen to like the ideas that I'm going to be telling you here and you take the time to backtest those and really see the different little variables that it has, you can be very successful doing so. So if this sounds like something you want to learn today, make sure and you stay tuned for the entire video. So traders, as I said before, we're going to be talking about the Asian session, and let's actually get started with that, right? For the sake of this video and in order to make everything understandable and really easy to comprehend, let me actually start by drawing a market, right? So give me a second, guys. Let's actually go ahead and draw the market as we usually do in this channel, right? So let's imagine this is a market that you're watching, right? You're just coming to the charts, you just started your trading session for the day, and this is what you see. Well, the first thing you want to do is denote your Asian session range, right? Let's imagine your Asian session range started right here and continued all the way until here, right? And let me actually do it better because I want to make this very clear. So let me try again, maybe this time. Okay, this is perfect now, guys. So this is your Asian session at this point, right? It starts here and ends right here. So the very next thing that you want to do is separate Sydney from from Asia. So you're going to be doing that. You're going to be drawing a vertical line just like this, and you know that, okay, the first 2 hours of Asia is actually Sydney as well. So you're going to be doing that, right? You can actually label that. You say to yourself, this is Sydney, and this is, after this line, this is what we call true Asia. This is the true Asian session at this point. Now, once you've done that, once you know where Sydney is, where Asia is, and how your Asian range actually looks like, the very next thing you want to do, and for that I'm going to be grabbing a different color. Let's choose blue. And let me get this line. You want to denote your daily open candle, right? So this right here is where your new daily candle begins. Again, once you need to understand that when Sydney begins, a new daily candle opens. And for that reason is why we get the algorithm resetting and getting ready for a new day. So you want to be doing that and you want to be labeling that as well. You want to say to yourself, this is the daily candle open, right? And the reason you want to be doing that is pretty simple. If you trade and if you look at charts on a daily basis, what you should notice, and I think at this point everyone already knows this stuff, but let me actually say it again. If you are expecting in this particular day a bullish candle, right? You say to yourself, I believe we're going up today. Well, then you should know that the way candle bills and the candle cosmetics actually look like is the following, right? If you're going to be having a bullish candle today in the daily chart, then the daily candle is first going to go down, leave retrace potentially, right? Is going to be going down, and at some point it's going to start rejecting, right? It's going to be leaving a wick right at this point, and then it's going to be flipping bearish, right? And what you end up is with a candle that has a tail and goes higher, right? This is how a daily candle looks like. And what we're denoting with this information right here, the daily candle open, is actually this section right here, right? You can say to yourself, this is the daily candle open. Daily candle open. And the reason I'm saying, if you're expecting a bullish day, right? So you want to see the daily candle open, and your job within this particular model or strategy is to buy as close to the tail as possible, right? So that you can buy up and make money buying because you're expecting a bullish candle today, right? So how does that translate into the Asian session range? Again, it's pretty simple. Let's actually get started. If you've been watching my channel for a period of time, you know what I always say about the Asian session. I said that you want to be paying attention to the high, and you want to be paying attention to the low and the midline. And let me get into the reasons why, right? So your Asian session high is a huge liquidity pool that the algorithm is going to target, and the same thing with the Asian session low is another liquidity pool. And the reason why you want to be paying attention to the midline is because you can potentially have a lot of price interaction over there, and you want to be really paying attention to that. Now, as we said before, guys, we're expecting a bullish candle today in the daily charts. Well, what this module really does, and what you really want to be doing, is waiting for the low to get grabbed first, right? You want to see how we liquidate the Asia low first into a potential structure point or liquidity zone, or you may have some trend line liquidity sitting below here, and you want to see how they squeeze that out first before you actually try to buy, right? So the idea is that you want to wait for the Asia low to get grabbed first, right? And at this point, the daily candle would look something like this, right? You would have the daily candle with almost no top wick and just pushing down at this point. And that is going to be your tail right here. So you wait for the Asian session low to get grabbed into a structure point, and then you're going to be looking for those buys up, targeting the Asian session high. And before we actually continue, I'm going to be showing you the indicator that I use and the settings that I'm using for the Asian session range, right? It's really not necessary, but if you some of you were asking for it, so I'm going to be showing that later. But for now, let's continue with this. So as I was saying, now we have the Asia low grabbed first and the high remains untouched. This is key, guys. If the high is not untouched, this is not going to work. So you have a daily candle that can potentially look like this, just bearish price action at this point, and you have your Asia low liquidity being grabbed. Well, then your job within this module and strategy, and let me actually clean some of this stuff because it's getting pretty ugly. Your job within the strategy is to target this, right? This is where you want to get. So once you have the Asia low grabbed, you're going to be looking for those buys up into this price point right here. Once you've taken that Asia high out, you close your position, you close the charts, you say to yourself, good job, and you're done for the day, right? You're not going to fucking care that the market then went ahead and pushed 100 pips higher, right? That's really nonsense. What you need to understand is that you're trading a particular model, and if you really want to make money within this module, you gotta follow the rules to the T. So we translate this information into the daily candle. Now you understand that this is my daily candle open. Somewhere in this region, right, would be your daily candle low. Let me actually label that. Daily candle low right here. This is your daily candle low, and you are aiming for the Asian high because there is a very high probability that's going to be taken out, and that's going to be actually your daily candle flipping and pushing bullish. But again, you need a bullish bias for the day, otherwise this really won't make much sense. So this would then be your daily candle high somewhere over here, right? Um, Let me actually move it around. Okay, I cannot, whatever, this is fine. So this is now your daily candle high. You've got the Asia high liquidity, and you're done for the day. You don't care that the market then does this and goes higher. Maybe you can leave a runner if that's part of what you really want to do, you can do that too. But essentially, you want to be taking out most of your position right at this point, because it can very well hit this point, grab that liquidity and continue lower, right? There's really no guarantee that we're going to be pushing up forever. So again, guys, what I'm giving you here is pretty powerful, right? I'm giving you a way that you can always know where you're going to be entering the market, where you are going to be exiting the market, and when you're going to be attacking the market. I'm giving you all keys. And if you combine this with good emotional control, good risk management, there's really no reason for you to not be profitable. I'm giving you the information right here, right? So I hope this explanation was clear, right? I think I may have gone through it too fast, but you have the ability to rewind the video in certain sections if that's what you feel like you need to do at this point. Now, if we're talking about a bearish scenario, right? This is all for a bullish scenario. I'm not going to be taking too much time because it's essentially the same thing, just flip the other way around, right? Let's actually use black. So let me remove this. Let me grab this tool. So let's say this is your market, right? You come to the charts and this is what you see at this point, and you say to yourself, okay, this is my Asia session right here. This is my midline. This guy on YouTube has told me thousands of times that I need to be paying attention to that. I also want to be looking at the the Asian session high and the Asian session low and the daily opening price and the separation between Sydney and True Asia, right? So we said before, this is Sydney and this is True Asia right over here. The next thing I want to do is grab my tool and denote the daily candle open, which could potentially be somewhere over here. You actually label that, right? Daily candle open. And you want to be seeing the opposite thing, right? You want to be seeing how the Asia high is being grabbed into a structure point, and then you know that, hey, we've grabbed the high, we've got the low to grab. This is a magnet for the algorithm, and in case it's not protected, because again, there's days that the Asia low or high is going to be protected. However, that's a topic for another video. But once you know that you've grabbed the high and you got the low to purge and take, you're going to be waiting for whatever confirmation you want to use, and you're going to be targeting this Asia low right here, this liquidity pool. Once you hit that, as I said before, you close the charts. You say to yourself that you've done a great job and you're done for the whole trading day. There's really no more reason for you to be actively looking for trades. So yeah, that was the technical explanation of what you're going to be learning today. And we're actually going to be jumping into the charts right now and actually taking a look into this and translating this into candles, right? But the main takeaways, guys, if you're expecting a bearish day, you want the high to be grabbed first into the low because of how the candles in the charts actually form, right? In the scenario of a bearish day, you're gonna have price first pushing up, then at some point it's going to start retracing, it's going to leave that wick, and at one point it's going to start flipping the other way around, and you're going to get the expansion slower. And that's how a daily candle forms, right? That's why it's crucial that you denote the daily candle open. So yeah, that was that. That was the technical explanation. And now let's go back to the charts and let me show you the indicator settings. So traders, for this last section of the video, we're going to be taking a look into the charts and we're going to see how this thing actually translates into candles. But before we do that, let me actually go ahead and show you my indicator settings and the indicator, because some of you were asking for it at this point. Now, if you look to the bottom right corner, you can see that my time zone is set to London, right? This doesn't particularly mean that I'm living over there. It's just the way that I was taught, and the mentors that I had really is something that we just did, right? And it's the way that I've learned the different times and sessions. So if you want to do that as well, you can do it. You don't necessarily need to leave in London, right? If you just want to follow up with the times that I usually talk about with the settings that I use, then you can go ahead and set your time zone to London. So The indicator is right at the top left corner. You can see the name. If you go to the indicators tab and you write in Asia, it should pop up right here. It's the first one right here, Asia session high, low, midnights, and it looks like this. Now the settings you want to use, you want to go over here to settings and you want to set this like this. You don't want to touch anything else. You just want to be using this setting. And this is how your Asian range is going to be looking like, right? You can see it starts at 10 and ends at 6, which is perfect. You now know that if we zoom in over here and whoops, the explanations that I gave you before, well, let me actually go ahead and grab a vertical line. Where is it? Right over here from 10 till 12, you got your Sydney, right? If I actually got it over here. So you know that anything from this line until here is Sydney plus Asia, and anything to the right of this line is considered your true Asia, right? And now if we follow up what I was explaining, you want to be denoting your daily candle open, and that's going to be at the start of Sydney. As you can see, this right here, 10 p.m. is your daily candle open. So you want to go ahead and drag it across. And now you know that this is where the daily candle opens. You can label this daily candle open. Another thing you can do is actually, and what I suggest you do, this is something that I do, is set the Asian session high as a liquidity pool. And you can go ahead and draw a line at the top of the range and label that Asia high, and now you know that this is Asia high liquidity. Now if you see here, and if you watch my Forex daily cycle, you can see the low prints right at 2 a.m. It's not surprise, not coincidence at all. So we leave Sydney, we move into Asia, and as you can see, we take the low out into this origin of this fractal structure, right? Because structural shifts multiple times, structural looks different on each and every single time frame. So you can see that this is a low, this is a high. We broke structure right here. So this is a origin in this case. So now we see what we're doing here, right? We can clearly see that this is the Asia low. We grab it into a structure point, just as explained in the video, and then we move higher and target this Asia liquidity high right at this point over here. And again, this is a, what is this, 45 pip move. This is more than enough for you. You can take your profits right here or leave a runner and expect it to continue running higher. That's absolutely up to you. But the idea is that you want to get somewhere over here, right, where the daily candle is just pushing down. As you can see, the daily candle opened right here. It barely had a top wick. So you can expect that a top wick is going to be made, especially if you have a bullish bias. So you can see price comes down, makes the Asian session low. We move out of Asia, move into Frankfurt. We liquidate the Asian session low. We move into a structure point. We take equal lows over here out, and we hit the block and move higher. And the algorithm is now looking for this liquidity. And this is not, this is something that happens very often, right? It's not a one thing, right? That is just going to happen every once in a week. This happens very often. You just need to know what you're looking for, what your bias is, and really putting the pieces of the puzzle together. So as you can see, here is the same thing, right? We open somewhere over here. In this case, we really push up. That's okay. And that's what I was telling you guys. There's going to be variables. It's up to you if you really want to study those and pay attention to the variables. We push up. We leave the high untouched, right? This is the important thing. We leave it untouched. We move down. We grab the Asian session low over here, which is also a double bottom or triple bottom. I don't really know how retail really defines this, but this looks like some sort of support or double triple bottom. We grab that into a structure point that broke structure over here, and we move higher. And as I said before, you can take it at the structure point or you can wait for confirmation. That is up to you, right? If you always wait for confirmation, you're going to be missing some moves, but you're going to be saving capital on others that just don't work. So you can always put your stop loss below structure and you can target the Asian session high. And once you've done that, you're out of the market for the day and you've pretty much done your job at this point. So let's continue watching. Let's see. Whoops. So you can see here it happens again, guys. You got your Sydney over here, we open, we push up a bit, we break structure at this point, we look to the origin, we grab the Asian session low right over here, right, with this wick. This is not coincidence at all, right? As you can see, the market really pushes down right below that low, right? It's determined, it's programmed to do that. It's not going to leave a Asia low liquidity untouched if it has no reason to do so, right? We target the low, so you can see also some sort of relative equal lows on lower time frames. We just grab it into this structure point right here. This is a order block on a smaller time frame. We hit that and we move higher into the Asian session high where we can take that out, and now you're done for the day. As you can see, this happens back and forth. It's really up to you to study the stuff. So we look to the right side, you can see that this is pretty recent price action, right? This is stuff that happens day in and day out. So with that being said, this is going to be concluding the video. Thank you very much for tuning in. And if I was too fast with the explanation at some point, just make sure that you rewatch, rewind. The YouTube video is always going to be there for you if you need extra help at this point. So thank you very much for tuning in. And until next video, I wish you guys good and profitable trading.